Good morning and welcome to Trading the Trend on Wednesday, the 19th of October. Last week's trade was to go short gold. And if we look at the daily chart here, we can see that the downtrend, which we were selling into, continued. We are sliding as we speak here. And the idea was to go short at $1,689 per troy ounce, which was back in this resistance area here, made up of the July and also September lows. Now, we did that trade on Wednesday, and we wanted to see a short bounce back into the resistance area and then sell into it. Now, we didn't quite reach $1,689. We rallied to slightly below that, 1,682, but then continued to slide. And our downside target was at $1,610 per troy ounce. So for those of you who went short on this trade at lower levels, what you can do now is to lower your stop loss level to break even, meaning that you're not going to potentially lose any money in case of the market reversing and rising instead of continuing to fall. And this is always a good idea when you trade a trend, because once the trend is moving in your favor, if it is a strong trend, it should continue to move in that direction. So therefore, if you move your stop loss to break even, you won't lose any of your capital. So our stop loss on this trade last week was at $1,736 per troy ounce, above these previous highs from September and October. So now what we would do is move those stop losses all the way down to our entry level, not potentially losing any money going forward. And as you can see, the trend is still very much intact. And as long as we stay below this resistance area between 1,681 and 89, the series of lower lows and lower highs is likely to continue. This will only reverse if we were to see a rise above the 13th of October high at 1,682, because that's the last reaction high. And a reaction high is simply a high above the previous candle or bar and the next candle or bar. So as long as we stay below there, the trend is very much intact, and we expect further downside to be seen in regards to gold.